Good morning, everyone. Today is the 20th of May. This is Brad Matheny. This is the Plan Your Trade video for Tuesday, May 20th. And I want to highlight at least that we are continuing to play out my rolling sideways trend here. Now, ultimately, ladies and gentlemen, we have this upper range that we need to be cautious of. I tried to highlight that for everyone. I'm going to draw them again. Upper range and lower range down here that we need to be cautious of. These are what I call the ultimate high and low ranges. So you have this, 482 level on the SPY, and you have this 3 or 613, 611, 60 roughly level. Actually, just a little bit higher here, up in this 613 area on the SPY is the ultimate high. Now, I've been talking to you guys about this excess phase peak pattern, about how we're rolling into this bullish flagging, have been for many weeks, really started to roll upward over here, right over in this area. That's where we started to break above this trend channel, and we really started moving into kind of a breakaway phase right up through this channel here. So really, like right over here, we started moving up into a bullish channel. And that puts us at this breakaway level right here. We're continuing up in that bullish channel on news. News about tariffs, news about executive orders. It's really been a I want to call it a news driven, kind of blowing in the wind, kind of a market trend after those big tariffs. And then the 90-day pause. And then we've had a number of issues afterwards that have driven the market quite a bit higher. I will still argue, though, that below this 613 area, we could roll. And as I've drawn here in this chart, we could roll. Oop, don't want that. We could roll into my blue cycles here, which would be a somewhat elevated battle trying to get above this level, right here. These would be what I expect to be moderate rotations to the, trying to break above that 613 area if they happen. Or we could roll as I've drawn here with the yellow and the blue into a downward kind of a cycle move like this. And of course, the credit downgrade was one thing we had to worry about, but we really have to worry about, what the tariff deals are going to do to reflect the second quarter and third quarter numbers. So, I'm hesitant to believe that we're going to have the same type of growth that we had back in, Q1 or Q2 2024. I think Q1 2025 was a carryover of what happened in 2024, meaning that we didn't even have the new president until January 21st, and we didn't have any real new policies until basically February. And so I think we skirted through most of Q1 without too much difficulty. So now we're moving into Q2, and you can see here we started this breakdown here in February. We ended Q1 back over here at the end of March, right over here. And now we've been dealing with this type of rotation here. I think Q2 is going to be very interesting, let's put it that way, as far as earnings and reports and data. I think there's still going to be some positives to it, but I think that retail, for example, and others could have some real issues. Now, yesterday, a friend of mine highlighted that financials were breaking down. I've still been taking care of my brother and a few other things, but we'll come over here to the spider sectors and financials, XLE, XLF. Where is it? Right here, 5162. We're not breaking down horribly. Let me get rid of all these lines. still very clearly, rolling through this type of a flagging formation. And here we have the inverted flagging rallying. So, very cleanly breaking down, flagging, rolling up into consolidation, and then rolling up into an ultimate high. So we'll see how things play out here. Like I said, I'm not seeing any big major breakdown yet. But rejecting up at this level, up near this upper area, this resistance, could still play a pretty solid role. Like I said, we'll just have to see how it plays out. So the cycle patterns right now are Harami-Inside for the S&P, meaning an inside day. I'll go back to the SPY here. An inside day, potentially just trading very flat within this upper range, not really moving anywhere, basically. We are in carryover trend, and then we have an inside breakaway in trend mode, then a breakaway in counter trend, and a carryover in carryover. So today and is going to be fairly flat, I think. And tomorrow we have breakaway, carryover. I think we could get a nice big move. Next week we have the inside pause, another kind of a flat day, a blank day, an inside breakaway in trend, Harami-Inside and carryover, and a crush in trend mode. So I think we're going to be moving into more trending next week. We'll see how it plays out. But again, I think that we're kind of topping over here, and I would suspect that as we come off of this rotational rejection high right here in dark red, I would think that upper level right over in this area may present a real resistance level for the markets. So we shall see. Okay, now gold, and I'll go to QQQ real quick. Same type of setup. Had a big rally yesterday. I mean, massive after the news, but it does look like we're moving into kind of that consolidation mode up here, and we'll see how it plays out. Now, I'd highlighted this move across here. You can see this channel. This is kind of the topping area that I kind of think we might be a little overdone here and potentially roll downward if we get some sort of a breakdown. We obviously never had these breakdowns over here. I get rid of these. Now we're moving into the July lows back over here. This is potentially where we would look for some sort of a potential breakdown into these July lows, maybe rolling over a little bit, coming down. But these July lows can be anywhere over in this area. And that's kind of what I'm looking for in the future. I'm looking to see if we get that rollover into July, or if we continue to be very news based and rolling through these cycles. Boy, I got to go clean this chart up. Okay, I'll get rid of some of these. I'll get rid of them later. Okay, now let's go over to gold and silver. Gold and silver started to move a little higher. I cleared everything off my gold and silver chart because I wanted to kind of start over and show you, what's going on. Now, these are 1 hour charts, okay? So, what you can see again is, we have a little bit of, we have a little bit of flagging taking place here. We had that same type of flagging setting up over here. I could really come across these highs here, but it's more like this and this. And I would say here. So we're moving into that sideways type of flagging formation. Now I do see an inverted excess phase peak pattern here, flagging, moving up into consolidation. Well, flag consolidation. We have yet to break away to the upside. So I'll make this red and this red. So, we do have that move. And here we have the same type of move down to this low, coming up, flagging, and then really rolling off of this flag into consolidation. So, we're really looking at, the potential if we can get above this 32.85 level or above this 32.54 level in gold. We do have the potential for a very big move to the upside, at least recovering back up into the 33 plus 3,300 or $33 area for gold and silver, assuming we break above this flagging type of a high pattern, which is right here and right over here. Oop. Right over here. Ultimately, if we go out to 4-hour charts, you can see where we're at. We've rolled deeper into these lows in silver. So we have this very deep roll down to these lows, come up, flag down, roll up into consolidation. So we're really in a moderate consolidation phase here, which, if I am correct through the excess phase peak pattern, should attempt to break away to the upside, setting up a new ultimate high. We could, of course, revert all the way back down and break down. I think that's highly unlikely. But I think that this flagging formation and this little inverted excess phase peak over here is going to push us back up to the upside and really break away or attempt to the upward side. Now here, this is an interesting setup in gold, because the scenario that we have is a really strong rally up into here, coming down, setting up the flag, really breaking below the flag recently, down into consolidation across here and here. Very shallow consolidation, and I would think that the upside move here would be most likely trying to get above the flag high and the ultimate high here on a breakout. So we shall see. This consolidation could move down into the ultimate low pattern if we did have a more serious breakdown. But again, this counters what we're seeing here in silver. Now, we could argue that this is a big, broad flagging pattern here in silver, coming up, coming down, flagging, and maybe trying to break downward. But that, like I said, we need to see that play out. Okay. We don't have that playing out very efficiently. And you can see the move in gold versus the move here in silver. We do have that big, broad move here coming over here to kind of flagging. So in reality, this kind of looks more like rejection. Gold coming down, flagging, reaching and rejecting at a high, breaking down through the low, rejecting, coming back up. It looks to me like we are trapped in that flag range, just like the S&P is right now, trying to figure out what to do. And like I said, my assumption, given my research in metals, is that we are going to continue to see what's called invalidation back to the upside here, and we will see invalidation back to the upside here. So we are looking at a Gold and silver pattern today of a flat down in bearish trending. We'll see how that plays out. We have a momentum rally tomorrow in counter trending. Hopefully, this momentum rally generates some sort of an upward move in metals. I'd like to see that. And we shall see how it plays out. Now, lastly, we come over here to Bitcoin. Over here, over here, over here. Bitcoin came down quite hard yesterday and really is setting up. I mean, this is what's interesting about all of this is that we're setting up in that broad range consolidation. I've tried to draw it here. I'll draw it in blue because we've got this blue here. But, we've rallied up. We've hit the high. We've come back down. We've flagged. And we flagged, flagged out here. And then we broke down into consolidation. And then we broke back up into this kind of a reversion flagging formation back up here. And we are still in that broad kind of rotational range. Basically, from the flag high into and through this rotational range. So we're really in that range, just like the S&P. And failure up at this area would prompt, or based on Fibonacci theory, would suggest that failure up at this area means that we're going to come down and try to take out this low, and then this low, and then ultimately this low. So failure up in this area would suggest a fairly strong potential breakdown. Remember, it's going to try to take out these standout lows and these unique lows on the way down. But an upward move to invalidate would be like this. Leave that there for now. An upward move to invalidate would be like this on some very strong move or upward trend. Now, do I believe that one or the other is going to be more predominant? Right now, the bullish trend is setting up a bigger, broader type of an excess phase peak. If we look at this on weekly and auto scale, you can clearly see that we could have this kind of a double topping formation over here before rejecting, coming back down. So, you come over here and you look at our data, bring to front, you look at our data, and we could easily come up, flag, possibly move up into this area, reject, and we could move down below this area and consolidate before attempting to move down again. Now, look at this move. You see how we moved through the flagging, came back down. Here's our big broad flagging. Rallied up, rejected, came back down, stalled near flagging, and really rolled down into that consolidation phase before basing and trying to roll back out. So, where would we be through this big broad consolidation phase over here? If we were to break down, have some sort of a breakdown like this previous top, you'd be looking at a rally up into 113, 115, breaking down fairly strongly, consolidating around 80, 85, 90, and then potentially breaking down probably into this 50, 45, 55,000 area, trying to build a base around this area. And that would be the same basing here. So, about the same level of a pullback, 75%, 58%. Actually, maybe a little lower. Yeah, maybe back down into this area. Maybe 30, 40 grand. But we'll see. We'll see. It's just very interesting how these patterns are playing out repetitively, getting this broad flagging, rejection down into consolidation. Now we're getting almost the exact same setup over here in Bitcoin. The double topping, potentially breaking up above this, 108 level briefly up into 110, 112, 113, then rolling potentially downward. And if we get another 60, 70% pullback, we will be looking at this below 50,000 area, probably somewhere around 35, 45,000 for support. And that could be a big heartache for some people in the markets. That would generally indicate a fairly solid breakdown in trending. And notice how this took place in 2022 into 2023. This was a contractionary trend in the SPY as well before we got back into more speculation. So if we do get this breakdown this year and it carries out into, whatever, maybe November, December, maybe a little further, this would bode well for my expectations of a downward trend in the SPY. So we'll see how it plays out. Remember, the Fed started making very aggressive moves right back over here, raising rates. And Trump is making fairly aggressive moves right now, trying to contain spending, and we had the credit downgrade. So, quite interesting that we could get a double topping pattern, just like 22 here in Bitcoin. All right, guys, I'm going to go get some coffee. We'll see what happens with the data. And like I said, I'm expecting a fairly flat day today, which is good. I got to go take my father to his physical therapy this morning. But again, let's see how it plays out. We'll go from there. Okay, get some, guys. Talk to you later.